Here's the story. Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid. Such a sucker, sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to another beautiful trading day, retail trading team. This is Mastro coming to you live with your routine briefing, or as our friend Mr. Juiceball likes to call it, Trade with Geppetto. So it's everybody's favorite puppet show regardless. I hope it's your favorite puppet show. I don't know if you're watching too many other puppet shows. To each his own if you are. So what we're going to do here today is just kind of discuss what's going on in NQ land and how I traded it. So the way that I'm going to structure this, we're going to try it out, see what the two of you who participate in these briefings think, but I'm going to run through the day, starting, so I can put the chart here on sim mode. We're going to start like we're just getting here at the open, and we're going to just go from there and talk about the tradable setups and how that worked. So before we do that, we're going to go ahead and review the latest warm-up document, which you can find in the description of this video, just to kind of get situated and see exactly what I was looking at. So I'm going to go ahead and I'm going to clear everything off here We're going to start with the blank slate, tabula rasa, as some might say, and go from there. And I'm going to jump right into the trade simulation mode and look at what we saw as if it was 9:31 and we were just getting to our desks. Set this up. Get it going there. Get rid of the pretty little lines here. And this is what we're looking at. So this is our blank slate. So when I first come to the desk each day, I do exactly what you just saw, clear everything off so you don't have any biases. And I start in this 15-minute chart and just draw trend lines and other various horizontals and technical analysis tools. So we're going to do that together. And if you want to see exactly what I'm doing, you can go to the routine day trading document in the description of this video, like everything else. And I'm going to show you here. So scroll down to this Occam protocol, and that's what I'm doing here. And this page here specifically is going to be important. We had a absolutely perfect textbook. I've said that like 14 times so far today. Look today, and these 4 patterns are going to be important, specifically the top ones, obviously, because it was a bullish day. So if you want to follow along, you can go to this document and check out these 2 patterns. I'll show you a couple more times. So if you don't want to follow along, you will get the gist of it. So first thing I do every morning is, like I said, just start from the top bullet point there. So I draw trend lines and horizontals at overnight high, overnight low, and the opening range. So we're going to start with the trend lines here. So what pattern do we have going on here? It's obviously choppy, not super clear. Some might see head and shoulders, some might see other things. So what I just do to keep it simple is I just draw often pretty little triangles. So you can start with that, and you can obviously move stuff around. All the whole point of technical analysis really is to help you visualize everything. I think it's a little better than astrology, but at the end of the day, there's a lot of potentially different looks that you can have in a given day. So that's kind of the channel that I saw going into it. Maybe, actually I don't even remember what I drew this morning, but just looking at it fresh here, maybe something like that as well. So you kind of have a descending triangle in the middle of a channel. One more thing, one more digression. If you go to that document, you can click on, I look at 8 specific chart patterns that I get from the best trader that I've ever seen. I've seen some ones that have slightly better returns, but this guy's name's Tim Knight, Slip of Hope. You can go, these are the 8 I always pick out of these patterns. Yeah, this guy's pretty incredible because he's a perma bear who somehow managed to consistently make money in that bull market. So there are people with better returns, but I really do like his technical analysis. So that's what I'm looking at. So I always pick one of those 8, and that's where I get that from. So that's kind of that first little look. And really, again, to keep it clean, I see that descending triangle. I'll leave it on the chart for now. But then I go to those various horizontals. So we have our overnight low, color yellow, overnight high, also yellow. And that's kind of that initial look I have today. So I don't make any trades. You can see if you look at the time here, this is 9:30 and 59 seconds. So it's actually a minute after open. I don't make a single trade until that 9:31 time hits, because I want to see what that opening range looks like. So you have our 15-minute chart here. We have our general structure there. So then I go ahead and I move on as soon as that first minute prints, and I just go ahead and I draw 2 additional horizontals on this chart. So I see the 1 minute, this is a 1 minute chart by the way on the right here. I see this chart as a canvas. So I'm constantly drawing trend lines all over this as the day goes on. I don't really touch the 15-minute chart too much because I don't want to cause too much confirmation bias. So I use this 1 minute chart kind of as that canvas, and I'm constantly drawing all day, but I do not touch this opening range because this is the most important. I haven't tested this, but I would probably guess that these very simple 2 horizontals are the most important lines I draw all day, just because, keep in mind, I'm just trying to scalp. I'm just trying to make my points and finish with the day. I don't like to do more than 1 trade if I can. 2 trades would be the max, and then if I'm losing, I may do a few more. Yeah, right now I'm actually testing, so I've been going back through some of the back tests, which again, go to the description of the video, hit that warm-up document, Occam along the bottom. You can see how that's coming along. I'm tweaking a couple things, and one of which is I want to see what happens if I just take 2 trades. So I'm not going to digress too much there. I'm not going to really talk too much about that back test until it's complete, but I want to keep tweaking it, and you can just kind of follow that progress if you're so interested. So let's stay on track here, and this is what we got going in. So before I make any trade, this is what I'm looking at 9:30 and 59 seconds to start the day. So as soon as this happens, I'm going to go ahead and we're going to move through this a little. On 15, we're going to do a speed of 15 times normal. We'll go a little faster as we get into trade. So what am I looking at here? I want to see how price reacts to either us outside the opening range above or outside the opening range below. I do not take any trades within the opening range, so this is no man's land between these 2 green lines. And I want to get in the trade as quickly as possible, assuming it meets my 1 minute confirmation signal. Again, it's right in this document. You can see right here, this is what I'm looking for that signal. So you can also see my various management things here as well. A couple things that are important. One of the most important things, in fact, I'm going to go ahead and bold it, is you don't ever want to fade that 50-minute candle. It's just, you don't need to. There's plenty of other opportunities that go along with that 50-minute trend, and that's why we have that chart to kind of keep us honest there. So we're looking for these specific candles on that 15-minute chart as well to kind of aid the second. My TV's about to turn off here. Okay, to kind of aid the bet sizing. What I've been doing is this first trade, I'm always looking for that optimal entry, and so I'm doubling the bet size. In the back test, it's actually turned out tremendously. It's almost doubled the P&L so far. So that's a cool little trick, that just that first trade doubling that. So I'm going to go ahead and move this to 2 contracts, as you can see along the top there, and just for that first trade, that's what I'm going to do there. So as we're hanging out here, and this is where the patterns that I was talking about a little earlier come into play. I'm looking to, and I'm going to bring it over here. So we're going to obscure the 15-minute charges for a second so I can address these patterns once again. I'm looking really for, if possible, some days you don't get this, but in a perfect scenario, which happens really most days than not, I'm looking for one of these setups. So today, I'm going to move this again. Let's look at that 15-minute chart. What do you see? So note what's going on here. I'm going to extend this a little bit. Look at the behavior of this chart, and I'm going to bring back I'm actually going to put it over here for now. What do you see going on there? What is going on as we test the low, pop up, test the low, pop up, make a new low? Perfect example of this pattern right here, where test the low, fake breakdown, and then you look for it to pop up. But it hasn't popped up yet. We don't want to engage within that opening range. So that's what I'm looking for to start today. And today's textbook, by the way, they're not all like you're going to see. It's going to turn out beautifully. They do not all turn out like this, but this is what you're looking for, and this is just what happened today. I will break these down in subsequent days. I'm going to use these videos for that, just so we all start recognizing the same thing. So today's going to work out perfectly. It doesn't always work out perfectly, but it's a really good example, I think, if you want to see what a perfect day looks like. So we're looking for this to play out, and we're going to wait for that confirmation. Obviously, we're going to wait for price to come outside the opening range. So as the day starts to progress, this is 15x speed. Let's see what happens. Okay, so we have the signal. But what I need to see as well, if you look at my rules, I'll go back here one more time, or maybe not one more time, but once more. Where are the rules there? Here we are. Is I want to see, did I even write this down in here? I did not, so I'm going to actually put this in here. When it stops. Let me see how to phrase this. Okay, so I just kind of have always done that, waiting on the close, but I guess I need to put that in the rules there. And I'm going to play with that to bring it up here. Let's see. Just a quick little neurotic thing here. Okay, very good. I wanted that all on the same page. So, any case, so moving on, you want to see that price close outside the opening range as well. Again, you don't want to get faked out. There's very often fake outs, especially on those chop days, and so you want price to first close outside opening range. So what we're looking at here, we have the signal. We just need price to close outside opening range and then make a higher high. In this case, sometimes a lower low. So wait for price close outside of OR and make higher high or lower low. Okay. So there's a close outside. So now we're just looking for that higher high to get our entry. Boom, right there. Take the entry. And so this is how I do the stops. I always want that 1-to-1 risk reward, but I don't want to stop inside the opening range. Again, if you look at those rules, one of the key rules is no stop inside that opening range. So that means we have to drag it down here. So we'll put it right outside. We'll put a total risk of 83, which means looking for a profit of 83 points. And then you just let it rip. So we'll go a little faster here. Watch what happens. And that's my day. Concluded at about 9:45. Nice and easy, nothing fancy. So if you look at my other entries, by the way, today I actually missed that opening, that first trade because I was feeding the animals. So like a nice irresponsible trader, I missed that first trade, and I did get involved here. So when we broke back above, so instead of 83 points, I only made 65 just because I made my stop a little tighter relative to that. So I got in somewhere around here. I put my stop somewhere around here. So 65 points was the risk. But that was the textbook trade again, and we're playing off. So we'll go back to the 15-minute chart here, just playing off that simple pattern. It happens a million times. These 6 patterns happen a million times. See, Mr. Juiceball asked about the 83 calculation. So, Mr. Juiceball, let's go back. We'll start that trade over. So we'll go back 10 minutes. Clear trade simulation order and all that good stuff. Okay, so this is at 9:30. We want to get to 9:32. Okay, so we get the entry signal right about there. Obviously a little lower, so it probably wouldn't have been 83. But let's just say you're late to the party here. You get in there, and so I just drag the stop down. So in this example, because again 15x speed, so it's now at 86. But I'm just looking at where my stop is, OJ. So my stop is, let's just say 85 right there. Right below, again, I don't want any stops inside that opening range. I want them to come out and unwind that open. So I'm glad you brought this up. So let's digress a second here because I forgot about reviewing the warm up as we were doing this. So within that first minute, I'm also looking to fill this warm up. So the overnight inventory obviously comes into play. And this is just explaining the stop, OJ. I'll answer your question in more than a roundabout way in a sec. The overnight inventory I obviously do before, but that open, which is that first candle, I want to see what's happening here. And so today you had that open test drive. You had the same thing yesterday. That's why I had a loser yesterday, as I lost on that first trade because I played that bullish open test drive. We popped back through. I played another long and lost that as well. And that was my story of yesterday. But I want them to work. I want them to force me out. So a lot of people use that 30-second opening range. I just use 1 minute because I like a 1 minute better. There's really not much difference. Maybe some quant could argue, but I want them to force to change this open. So it's an open test drive. Why is it an open test drive? Because we pushed lower, popped higher, and now we're popped back outside it. And no worries at all. No worries at all. That's just 1 minute. The opening range I'm using is just this first 1 minute candle. I don't look for my first trade until at least 9:31, and usually not until 9:32 because again, price has to close outside. But that's what I'm looking at there. I just draw horizontals on this candle and then I analyze it relative to that. So open test drive. So, anyways, that's a quick divergence. I don't know if that's even proper word to use, but that's where I got that stop from. So I want my stop to be always outside the opening range. Right outside the opening range is about 85 points. The way that I back tested this is I have to have that 1-to-1 risk reward minimum, and I just keep it 1-to-1. Obviously, as time goes on, I'm sure I'll figure out something better, but for now, I want that 1-to-1, which means I have to also do 85 points for my target. And it's that simple. Play it out. There you go. Yeah, I mean, I don't know. 3 minute might be superior. OJ, again, this is just the back test. I just used 1 minute, and the only reason I use 1 minute instead of 30 second is because I don't like 30-second charts. So yeah, nothing, no brilliance definitely in that. It was just kind of personal preference, and it works well enough. So that's what got going on there. And yeah, so that's how that first trade worked out. So again, bringing us back to the point of all this is that's that first pattern. So you got that perfect look there. I'll come up with names to these patterns as time goes on, just to be cute and clever. But it's this one right here, and that's how that played out. So let's say that you're not like me, you don't want to scalp and keep going, and that you want to keep trading. So you got a nice first trade, and now you're looking for the second. So what else do we have setting up here? Well, what very often corresponds to this pattern is you also see this ABCD type look. Let me answer OJ here. Yes, sir. So, Mr. OJ, since you asked, let's go look at it. I was saying a couple of minutes ago, uh, I've nearly doubled the P&L by just going double the size on that first entry. So I was initially doing 1-to-1, but always doing that one contract. But I just got curious, so I was like, well, what if I just do two contracts on the first entry? So yeah, that's what I did. I just doubled the 620. So what I'm now going back and doing is trading each day over again. I'm starting with the hard days, and it's been really tremendous. So 324 was one of the worst days in the back test. If you just go back, applying everything, turned out to be a pretty decent day. So just kind of what we talked about, just entering based on the signal, putting the stop outside the opening range, letting it rip. So I expect this to actually be better as I go back through it. But yeah, backtest has been pretty tremendous. Win rate's already gone up a full 5%. Um, it's looking good, looking real good. So that is how the backtests have been. And in terms of the median time in trade, OJ is currently 8 minutes. Again, I have to update some of these. So like 19 and 20, I wouldn't be getting in until 9:32. These are just breakout days, so it's not going to make a difference. But yeah, most of the days, as you can see, you're in before 9:45, and if median time at trade is only 8 minutes, pretty cool. So again, this is warm up document. It's along the tab along the bottom here. I'm going to clean this up. I want to get rid of the Fabio and the sit back test because I'm really just going to focus on Occam until we get a superior runner system. But yeah, so to answer your question, Mr. Juiceball, that's what we got going on. So anyways, yeah, so back to what we're talking about pattern-wise here. So you have that textbook. We'll call this pattern A, B, C, D. We'll call this pattern D for now. But let's say you want to keep going with your day. What often happens with pattern Ds, you get a pattern. As my mic turns off, you also get a pattern C. So you get that ABCD type look. But in this case, we're looking for it's going to be a little different. So it's going to be this ABCD. Where's the other one? Oh, I don't have a picture of the other one on here. So we're looking for it the other way. So let me just show you for it what that means on this chart. So this would be the bottom of it. And so it goes A from bottom to B to a top to a C pullback. And then you look for D. So let's look what happened today. So rallying. It's going to rally for a while here. I'm actually going to put this on faster speed. Okay. So you're waiting for that first red candle. Okay. So now you're looking for where is this pullback going to be? So A to B. Where is that C pullback going to be? And you just look at your various MGI or other levels. And what do we have going on here? Again, textbook day. You have that overnight high. So what does that mean? It means we look for that overnight high rebid. Very simple. So let's wait for that. And again, even if we get a signal on this 1 minute chart, remember, we're not fading the candle. We want to wait for either the candle to reverse or a new candle to start printing that looks favorable to us. And again, I'm referencing this document, and I'm looking for, oops. Okay, let's go back 5 minutes there. I'm looking for one of those 8 different candles. And You can see which ones mean which. For example, I'm not ever even looking to engage with a 5 candle or 6 candle, just because. Did I note that here? Could have sworn I noted that here. Basically, all 5 and 6 means that the trend is weakening, but it's not definitive. So I will fade a 5 or 6, but I don't really use them to engage, if that makes sense. So I'm looking for 1, 2, 7, 2, 3, 4, 7, or 8. So it's all right here, but these are the only candles that I'm looking for. And I'm only looking at these on a 50-minute chart. 1-minute chart doesn't mean anything. A 50-minute chart is the lowest time frame that I care about what's going on with the candles themselves outside of this signal. So the signal is just based upon pure price action. I don't care what the candles look like. And then the candles themselves will inform the assumption based on that 15-minute chart. So when I'm talking about candles, that's what I'm looking at right there as well. So yeah, so again, we're looking for that ABCD setup. You have the A, you have the B, and now I need to go back a minute, 5 minutes. Okay, so we don't want to fade this candle, so we're waiting for that new candle to print, and we're looking for that rebid along the overnight high, because again, you don't want to just jump in because you get the signal. You need the signal to correspond to a level. In this case, that level is that overnight high. So let's watch it happen in real time. Wait for that candle to print. You do not want to fade the candle. I don't care what's going on in the 1-minute chart. Okay, now we have a new candle. So now I'm looking for that signal. I like the level. We're around that overnight high, and so I'm just looking for that. It's called, I think it's something to do with fractals. Again, I just use what I've read about and that I've found that works. I don't really know the math behind it, but for some reason this works and is popular with a lot of successful traders. So since I'm going long, I want the current candle to make a higher high relative to the other, or to the previous candle, which we're calling 2, and that price then also needs to be higher than the candle that's 4 candles back. So that is my signal. No rocket science there. So we just sit and wait. Boom, right there. So you can see it, higher high relative to the one before, higher than the 2 prior, and I get the entry going. So again, I'm finished for the day, but we're just saying if you also want to take that ABCD setup, you'd want to do that. And you want to give this a little bit of room, because very often these do get stopped out. And so what I do is, again, I go to that 15-minute chart, and I want to find a level. You could use this level here. So you could give it about 20, 2250, something like that, points of room. What I do for these ABCD subs, by the way, I'm not looking for a target until I hit another important level. So this is a much, usually a longer trade, and you're looking for that bigger reward. So in this case, again, for me, I want to give it a little space. I don't want to get stopped out because I don't want to get back in. So I'm looking for another decent spot to set that stop. And if you go look at the 15-minute chart here, you have a significant candle to play off of. So if we go back to our document, what candle does this correspond to? Well, it looks a lot like candle 1. Looks a lot like a nice little continuation candle, and so I'm going to play off of that. So what does that mean? That means I just set my stop below that, so that level is going to be. By the way, I don't remember if price dipped below this, so we'll see if I get stopped out here. 44. So we want that to be at 44. Let's see what happens. 4375, close enough. Okay, and then you're letting it rip. So where is my target on this? You could be conservative, and you could target a trend line and just take it when it touches it. But what I like to do is, so usually I'll have a runner going. So I'll often, especially because these are wider, I'll use MNQ, and I'll do like 10 contracts MNQ and take off 5 at a certain spot. But if you are just doing one, and we'll just keep it simplicity for doing one, you don't want to just wait for that target, especially for these ABCDs, because they can often lead to a significant continuation. So you want to first wait for weakness. So I'm just going to outright get rid of the target. We're just going to trail that stop as we get near that trend line. So let's see what happens. Again, it's going to take a while, and I don't know if this gets stopped, so I'm just going to go to fast speed. Okay, so we need to make the higher high. It's irrelevant until we make that higher high, and there we go. So that was pretty fast. Let's go back. So higher high is going to be relative again to that low we put in this morning, beyond 49. So we'll just put a little horizontal there so we can see what we're talking about. So I'm not looking to close until we get above 49 there. So let's watch what happens. So we're above 49. So now I'm going to look to trail my stop. So again, we hit that trend line, and it's very possible we get that quick reversal. So this is where I drag that stop out very simply to that 4 fractal reversal. So where's currently that 4 fractal reversal? 1, 2, 3, 4 right here. So I'm locking in minimum 53 points right there, but I'm going to, again, keep trailing it. So we'll see what happens. I just keep trailing at that 4 fractal reversal on the 1 minute chart. Okay, so we are moving it up once again, locking in 84.25 points. Up here again. So if I'm being honest, in this case, I'm going to leave it right here, just because I want to give it just a little bit of space in case they run this doji. So we're going to do exactly what I would do real time. So we're going to leave it right there. Again, sometimes you do give up. I don't know how many points. That'd be like 2 points, but it's worth it, I think. Still keeping it there. So when we make another higher high, I'm going to move it up once more if I don't get stopped. Okay, so we got stopped. So let's see what the total payout on that trade was. Again, I didn't take this. If my first trade's a winner, I just sit on it. But that this is, again, it's just such a perfect textbook day that you also had this beautiful setup as well. 162 minus 78 is 80 something points, and that's another great trade. So yeah, so that is the ABCD, and again, I'll have to come up with a name for these patterns, but pattern D, and very clean and textbook move above that trend line. So yeah, so that was a bit long in the tooth for, I'm not going to necessarily be that long in reviewing the day, but when you have a perfect day like this, it's a great one to look for, especially that initial setup. All major moves start, how many pterodactyls is that? I will have to think about the roast behind that joke, Mr. OJ, so I'll have to put it through my boomer translator. Any case, yeah. So all major lows, all major highs begin with these two patterns. So either you pop below, or excuse me, all major reversals begin with these two patterns. Pop below, pop above. And you saw that yesterday, not yesterday, I think Thursday on the 15-minute chart here. Check it out. You saw it the other way. You saw that big push above and then pop below, and you had another great trade like that. So I'm just looking for these setups all day, every day. The only other setups I'll take is if we go back to the candles here, when I have that opening range for that first trade, if I'm seeing a candle that I like with between, let's say, 932 and 935, if I see continuation relative to these, I'll also take those. But if I'm not taking a play based on a pure candle, on, again, 15-minute chart, not based on a pure candle, I'm looking for one of these. And that's it. It's that simple. Simple is not easy. Obviously, you have to learn to recognize it, but that's all I'm looking at. So if you want to play along and investigate what I got going there, you can go to the cool little document. 1 second, I just accidentally added a footnote. Why did I do that? Stand by. Okay, cool. So let's move on from the lovely trade review and look what else we got going on here in terms of levels. So this will be much faster. I know this is a long briefing, but I think that it's been pretty valuable to anybody who didn't already know what we talked about. Cool little pattern review. So that is intraday, but let's look at big picture. So I'm going to go ahead and stop this. And you can see we got stopped out at 78 there, which is really almost a perfect stop. I didn't even plan that. Look at that. So we got stopped out right there, and that was the reversal, at least so far. So when it comes to these major trend lines, so the major trend line, I'm going to go ahead and get rid of some of these just so we can talk about a big picture. The major trend line is really this channel that we got going on, starting, and you really, if you want to be nice and tight with it, draw it like this, is you got this descending triangle coming from the high. And what usually happens with these major trend lines, again, this is a 15-minute chart, but if you look across, this correspond to a 4-hour chart or any higher time frame you want. You almost always have a fake out before just breaking straight through. So yes, we may reverse here and pop straight through, although this does look like a nice head and shoulders going into the rest of the day. Yet most of the time you do have that fake out, which is why you want to trail that stop nice and tight on the 4 fractal, or in our case we used 4 fractal plus a couple points. That's fine too, but you want to keep that tight, especially around those major trend lines. So this is the major wedge that is a descending triangle, the major descending triangle that I'm watching going forward, big picture. If you want to just draw that yourself in NQ, I think that's gonna be the key moving forward. So in terms of levels, let's look at the daily and weekly charts and see what we got going on there. So we'll start with the weekly and talk about the key levels relative to this. By the way, all levels in that warm-up document that I've talked about several times, if you just go ahead and look at the highlighted numbers here, those are the major levels I'm watching. I do keep those updated as new ones become relevant. So where did we reverse today? I actually don't even know what that level corresponds to in the Qs. Let me check it out in my handy dandy platform here if it'll pull up. Stand by. Okay, so we reversed on the Qs. Second. About 365. And that is not one of my significant levels right now, so we'll see if that holds. But it's not one of my significant levels in here. I don't really have a big one until 368 to 368.50, so we'll see if there is continuation as the day goes on here. But these are the Q levels I'm looking at, and they often correspond to those setups that we were talking about a little earlier in the briefing. So in terms of bigger picture, besides just the levels themselves, what do we got going on in terms of our various setups? Again, that document, I'm not looking at these setups intraday. I'm just doing price action, pure price action intraday. But if you want to look bigger picture, I use the weekly profile. These are excellent. So relative to this, we are still in a state of imbalance. So we had setup 5 occur, and we are still in a state of imbalance. As you can see on this chart, we are well outside that, well above that 340 area, and in a state of imbalance. I think I said that 5 times, same sentence, but so you get what I'm saying there. The interesting thing that has occurred is we have popped back below our weekly 4 sigma VWAP band. So we are definitely in a state of consolidation. A couple of my friends were talking about how it looks like the market has topped out and a sell-off has started. And what this looks like to me is a very orderly sell-off. You're not seeing the type of dramatic level destruction that one would expect. I think for a significant pullback, you're not seeing any volatility. In fact, yesterday, I believe VIX ended the day, the VIX ended the day down something like 5%, and today it's now once again down. So to me, this just looks like a consolidation, and I'm not expecting a test of this 340 area quite yet. So what does that mean? I personally think it means to favor those long trades when these setups occur, and just recognize that the bulls are still in control. Taking it level to level, obviously, but recognize the bulls are still in control as long as we are in imbalance. So I'll be watching this closely to see if and when value does change. But right now, it's staying lower, and we are waiting for the market to make up its mind, which I think may be higher before lower until and unless volatility increases and you start to see a more dramatic type of level destruction. So that's what's going on in the weekly. Just really 2 things again to review. We are slightly below that 4 sigma band, kind of consolidating around it. To me, this is bullish. It's kind of more of a cool off than a real correction / pullback. And then also keeping in mind we're in a state of imbalance right now above 340. You don't scare the sheep before you shear it. Bears are picking the herd one at a time. Very poetic, Mr. Juiceball. I think I agree with you, although once again I'll have to ponder that wisdom, that aged wisdom that you have imparted upon the chat, and I thank you for the lovely metaphor. Metaphors aside, looking at the daily chart, we have a couple interesting things. So if you look at the 4 sigma VWAP here, you see that we are still above it. We have not yet tested it, so we are still in a state of overboughtness, if that is a word, on the daily. Yeah, as I mentioned a few days ago, the Qs are much different than the SPY. So in the SPY, when you pop above those VWAPs, you almost always have a reversion back inside. Yet the Qs, if you look back over the years, often have trends outside that VWAP. So I'm keeping in mind that we are definitely overbought, yet at the same time, it's the Qs do not behave like the SPYs on the daily relative to those VWAPs, where we have to correct back inside it. So just kind of keeping that in mind and just watching it in terms of sentiment. Need them to. Again, I think I agree with you, Mr. Juiceball. There's like a little heart thing, so I can't see that word. I think that says HODL. Yeah, there it does. I don't know why there's these new emojis on the chats, but I think yeah, hey, we'll see. I personally favor that double top if we want to talk crystal balls for a sec. I would much rather see that double top and then a fake breakout leading to that nice push lower, but we'll see have to see what happens relative to that. So yeah, so that's what's going on there. Again, that you have that 4 sigma VWAP. Look at this on the SPY. This is Sierra chart, but I'm sure all platforms have it. If you go to volume weighted average price, so for those who have Sierra, just go to volume weighted average price. Very simple, 1, 2, 3, 4. I'm looking at the four standard deviation VWAP band, and that's the only thing I'm looking at there. On SPY, it's much more interesting. On SPY, when you pop above like this, you always have that corrective move sooner rather than later. So I think the longest I saw on SPY was a matter of a month, maybe even less. I'd have to go back and check. So a cool little tool if you want to check it out in SPY. So in Qs, I'm just kind of looking how it react relative to that. Still overbought, still above it. Yeah, we can be above it for a while in the Qs. So I'm not going to talk anymore about that. But what I'm going to talk about is this nice little relative volume spike. So if you look at the high on Thursday, I will answer Mr. Juiceball's question in just a sec. So if you look at the high on Thursday, you can see that you do have that volume spike. These spikes, so especially the big ones. So this one, let's see, let's draw a little horizontal there real quick. Well, it's not going to let me draw it in these. So we'll go back here. If you look at past spikes like that, they often represent near-term highs or lows. So this one delayed by a few days, but you just see a bit of a pullback after that. This one, as my mic turned off, this one was more absorption versus exhaustion. Okay, so that's a interesting point. So let me address OJ, and then we're going to talk about absorption versus exhaustion real quick. The rotation on your homework, have you found any correlation to a certain minute-based candle? What do you mean by minute-based candle, Mr. Juiceball? And as he answers that, we'll talk about absorption versus exhaustion. So exhaustion is often indicative or indicated by quick bursts in that volume. So this was more of an exhaustive move here, which is why you're seeing that pullback, I think, because you had a little bit of volume clustering, but nothing crazy, and there's kind of a climactic push there, and so now you're seeing that pullback. Yet here, when you see this cluster, 1, 2, 3, 4, 5, 6, 7 days of high volume clustering, that is absorption. So it means that from this sell here, buyers rather are absorbing those sell orders, and it took us a little bit higher. So again, here, more of that exhaustive push, but I'm just going to kind of ignore that one because you did see a bit of a pullback here, followed by another move higher here. I'm going to really ignore that. But again, if you go around here, you had that big push, a little bit of follow through, but then it led to some of that selling. So the clusters, back-to-back clustering, absorption, and the spikes are more of that exhaustive move. So in this case, the absorption is on the top side, 1, 2, 3, 4, led to a bit of follow through, down like so. So I think it's a little easier to see in the weekly chart, so let's go ahead and go there real quick. Again, I'm used to SPYs, which are a little bit different than the Qs, and the SPY daily is nice for that absorption versus exhaustion, so let's see if it's a little cleaner in the Qs here. Yeah, I think I like it better on the weekly in the Qs, so you can see what I mean. So if we go back, I'll have to play with the settings a little bit. Qs are a little different, so we're going to ignore the relative volume component for now. I got to play with the settings to get it a little cleaner. But again, I think if you're three agains, if you are looking at this on the SPY, check out the relative volume, check out that absorption versus exhaustion. Pretty interesting there, and I will get the settings right on the Qs as we move toward that. So yeah, so just to review, most important thing, I'm going to show you the pretty charts, but really the whole point of you watching these videos is so you don't have to think too much about the levels. I'll do that homework for you. These are the ones I'm looking at. I just keep them right there. So those levels relative to the various strategy elements that we talked about earlier in the video as well. And that is how I'm trading the lovely Qs. Crystal balls are fun, yet I think the most money to be made is just in keeping it simple. So be that day trading, be that swing trading, watching the levels, and looking for small little edges such as that relative volume that can be helpful for telling us when a good swing opportunity might occur. Again, I need to adjust my relative volume because if we're being objective, it's not as clean. But if you want to look at it in the SPY, it's much clearer in the SPY on the daily, so check that out. You see Mr. Juiceball has not answered the clarifying question. Did you hear me, OJ? I was wondering, what do you mean? What do you mean by rotations versus the candlestick charts? Oh, wait, I'm gonna go with these relative volume settings real quick. The rotation on your homework, have you found any correlation of that rotation to a certain minute-based candle? I mean, I guess reading it out loud, I get you're asking. So short answer is no. Long answer is I've looked at, so we'll go to this real quick. I've looked at the structure chart a little bit using these price retracements, but really, so for example, if I'm looking for the retracement, I would say this is a major swing there. I see that that's 255 points, whereas this one today is only 213. But I'm really looking at it for strength of trend, not really as I'm looking at that end number for trying to decide what kind of profit target to put on. So what we're talking about, anybody who's listening, is this end number. It's a volatility based expected move calculation that kind of tells you what you should expect for each rotation. So for example, let's look at yesterday because today is a little trendier. So if we're just looking at yesterday, when you have this sell, I don't remember what N was yesterday. I think it was pretty much the same as about 40. So when you have this sell and you start to get this bit of a retrace higher, you're looking for about 40 points of retrace. So let's just see how many points that was, for example, from the bottom, that initial move. That was about 80. So then when you got the rebid there, interesting. Wasn't very clean yesterday, was it? Very often, though, you'll see that N number corresponds to rotations before pullback relative to your entries. So I'd have to see where I got my entry around here. So I didn't have the entry. I was stopped out by then, but it would depend on that. So this is just kind of a expected move based profit target. That's all that is. So you're looking at a 5-minute OJ? Yeah, I will follow up with you about that. That's a interesting question, and I think worth exploring. So thank you for bringing that up, and thank you for hanging out. This has been by far the longest briefing. I think it has been helpful, besides realizing that my relative volume on the cues needs to be adjusted. But really the most important thing here is levels and strategy, and I think we covered those pretty well today. So that is all I have for you. I will follow up with a newsletter. I am going to change the format a little bit, just to, again, be more than just kind of a PR release and something that you can look at and it'll be helpful. So look out for that. And until then, once again, all the resources that we talked about today and all my most important resources are in the description of this video. So if you enjoyed hanging out today, or you enjoyed any aspect of this, I'd appreciate a like. That does help with that YouTube algorithm. It helps us stay in those double-digit views, which is the initial goal of this channel. So I appreciate that, and I also appreciate any engagement in the comment section of this video or on Twitter at Routine Trader, where I try also to kind of plot the day as it goes on, and I hope that that is also helpful to you as you go about your trading day. So I do thank you for your attention. If anybody gets through even half this video, thank you for hanging out, and I hope you stay classy until we meet again tomorrow.